Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday, the 18th of June. Well, we've got a pretty mild morning at the moment, nothing too significant in terms of direction. The only real mover you've got of note, I think, is sterling dollar, which is down. It comes ahead of the Bank of England, which is expected to move ahead with an increase in quantitative easing by $100 billion. £100 billion today. And the question would be whether it sort of starts to discuss have an open discussion about negative interest rates, and sterling seems to be under a little bit of pressure ahead of that decision. Broadly speaking, elsewhere, nothing too significant in terms of direction. Equity markets all but flat. What we have seen is that markets have sort of lost their upside impetus over the past 24 hours or so, just rolling over as the sort of push and pull impact of obviously the loose monetary policy from the Federal Reserve, but also the increasing sort of second wave threat of the coronavirus in China. Sort of the two pulling and pushing markets in equal and opposite directions seemingly at the moment. And markets are consolidating as a result of that. We've seen the dollar, which had been starting to rally, sort of consolidating a little bit, touch lower today, just as the markets have just swung a little bit against the dollar in the last sort of hour or so. But broadly speaking, nothing too significant in terms of direction that we can see. Oil price, again, sort of similar consolidation that we've seen. Little shade lower yesterday, little shade higher today, but just essentially consolidating, I think, at the moment. Now, in terms of data points, that Bank of England decision is sort of the main one we have on the calendar today, and that comes at 12 o'clock. It's expected to be, again, sort of whether it, again, we'd be looking out for what the Bank of England the voting structure takes on from this decision as well. But that's at 12 o'clock. Let's show it here. 12 o'clock. Expected, as I said, to increase by 100 billion pounds. And then at 1:30 we've got the jobless claims, which is the weekly data we get on the labour market from the US. It has been declining over the last several weeks, actually, and it's expected to continue to decline to around about 1.3 million jobs. And you can see that trajectory continues to come lower on jobless claims, having spiked higher through March. And then obviously we're also looking out for the Philly Fed data, the business index, which is expected to improve to -23. Now, this is going to be an important level because what we did see the other day was the Empire State Manufacturing, which increased sharply back to basically zero. So these indicators are turning around, and how the Philly Fed data sort of picks up today will be another interesting gauge on all those regional Fed surveys. So that's again at 1:30. So that takes me on to my chart of the day. Now, risk appetite is always a key question. How is risk appetite doing in this supposed recovery, and whether the recovery is falling over is the question at the moment. Now, we've seen that Aussie yen has fallen away in the past week and a half. It topped out below 74.50, which implied actually a downside target of around about 72.25, but that now becomes a basis of resistance overhead, the 74.50 level, and it's been that throughout this week, and it's now sort of starting to develop this little trend lower scenario. Two negative candles in a row, threat of downside move early today, but just been quelled slightly. But you can still see these momentum indicators just dropping away still, and for now it's still essentially a pullback to the neckline of the to pull back to the trend line support, and we still would be positive on a medium term basis, but it's just whether this now starts to form lower highs and lower lows, because a move below 72.50 would be a lower low after a lower high, and that would be the building blocks of a new trend, potentially lower. So that would be the concern that we would have. But at the moment, Aussie yen is still holding up. It's rebounded off today's low, which is basically 73 figure. So the basis of support is starting arguably to build, but needs to see this this corrective move slowing. There is an argument to say that the hourly chart suggests that with this pickup in the last few days up above 30 on RSI, but we need to see more. And for that to happen, you'd probably want it to see above 74.30 initially. As I said, 74.50 was the neckline of that breakdown. So again, that needs to be broken. But also this spike to 75 figure area, 75.05, needs to be broken. Otherwise, you're still in effectively this sort of corrective outlook on a near-term basis. This trend line comes in around about 74.50 today, so that would be an interesting gauge as well. Okay, so with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and we've had another Trader Talks video, so you can click here to watch that and gain some top trading ideas.